Well, it's one of the big debates in global macro at the moment, the divergence we're seeing between rates pricing here in Australia relative to what economists are expecting and what the central bank are guiding to. Of course, they're guiding to rate lift off in 2024. Now, what's going to see them change their tune and come closer towards the market? I think the Reserve Bank really want to see the Q3 wage data coming out on the 17th of November. No suggestions that's going to be overly hot, but if it is, that would certainly solidify this divergent trade that we've been seeing. And I think they really want to wait to the February meeting where they were expected to guide around the extent and the efficacy of QE going forward. And I think from that point, then they could start raising and also guiding towards rate hikes going forward. But that's a long way off in their eyes. So I think the market got a little bit rich. Now, that trim mean number that we've been seeing today clearly is a strong number, 2.1%, first time since 2015 that we've come back in the RBA's target range. And we got pretty excited about that situation. Now, if you have a look at 3-year government bonds here in Australia, they have been selling off and yields have been climbing into the CPI print. We've gone from around 20 basis points up to around 80 basis points pre-CPI print. Today, that sell-off reached up to 1%. So that was a big move, and we're back down at the moment. It's been a little bit buying, but we're trading around 91 basis points, up around 15 on the day. If you go slightly further out, 5-year government ones up 12 on the day at 134, and you've got 10-year treasuries up just a mere 2. So a decent bear flattening of the curve playing through. If you have a look at swaps market, we're placing just over 3 rate hikes by the end of next year. Now, that seems rich in my opinion, given we need to see the wage data, given macro prudential, and still that they're still looking to tail off with QE. But that's where the market is. The market's pricing in 3 rate hikes next year. I think that's a bit rich personally, but certainly the market's got in there understanding that we are going to see hikes. If you have a look at the moves in the Aussie dollar today, no real fireworks playing through, but the Aussies are naturally stronger, and you can see nice moves against the yen, the CAD, and those currencies as well. But certainly relative to market pricing and rates, no real fireworks playing through. But have markets got a bit rich here? It feels like they have.